Right now, we're joined by KPIT Cummins. Remember, off late, we've heard some weak earnings from Oracle in the US. Accenture had lowered the guidance, and there are some fears in the markets that perhaps some larger IT companies as well there's a possibility they might have to lower their revenue guidance as well. So that's raised a lot of concerns in general on the IT space. Ravi Pandit, Chairman and Group CEO of KPIT Cummins, joins us on the phone line from Pune. Ravi, thanks for joining us. What is your sense? You as well have indicated that growth in SAP as well as in your top client Cummins is likely to see some slower growth. And given the noises that we've heard from a couple of these overseas players from Oracle and Accenture, etc., do you get a sense that revenue growth is going to be a little less than what you had earlier anticipated?
We don't see. We had given a guidance. We have given a guidance of something like 14 to 16% growth on our revenues. We don't see any reason to revisit that guidance at this point in time. We believe that we should be able to do that guidance, meet those numbers. I think there is a bit of a difference between what a general scenario is and what a specific scenario for a company like ours could be. We are a very industry-focused company, and I believe that the focus in the industry brings a lot more depth, which helps us, with good traction. And as you know, we have been growing quite rapidly over the last 5 years or so.
Would your revenues be at the lower end or upper end? If you could just tell us at least, what is it likely to be now?
I think we will meet the guidance all right. We shouldn't have a problem.
Are you saying, therefore, Ravi, that in the industry segments or verticals that you operate, you're not seeing too much of pressure, that things are as it was when you gave your guidance?
Yes. The reason I'm saying this is that the industries in which we operate are in the midst of some major paradigm shifts. For example, the auto industry is changing more now than it had changed in the last 100 years.
Okay.
And a lot of those changes are driven by, say, for example,
automation
or by software. Manufacturing industry is also changing very substantially on account of automation. And energy industry, as you know, is changing again in a very big way because of, the smart meters, etc. So we are fortunately working in those spaces which are in the midst of changes driven by electronics and software. So we believe that our ability to meet our guidance should not be hampered.
Point taken. And therefore, if your industry scenario is actually friendly to software developers, should you not be upping your guidance because you have an unexpected advantage from the rupee?
Our guidance is typically in dollars.
Dollars, okay.
So,
So in rupee terms, this would be better than what people would have factored in. It is. I mean, in many companies, it's getting chewed away by the pressures from the verticals they operate. In your case, since you say the vertical is not giving you any sleepless nights, the dollar advantage should hit home in your rupee balance sheet.
It should help. That is true. It should help.
Okay. We also understand that the company plans to reinvest 50% of the gains back into the companies. So could you tell us perhaps what the margin picture will look like? How much will flow through into the P&L margins?
So, the impact on the margin in the case of any company during the Q1 will depend on the composition of factors. One is what is the benefit that rupee depreciation would mean. And, in the case of most of us, it's a significant one. In a company like ours, we have a large international revenue, so that is helpful. But on the other hand, there are issues that are going to come up because of pay hikes. In our case, the pay hikes are applicable right from the first day of the year. And all this is actually being factored in the guidance that we give. So while we are having some benefit, I say the whole industry, is having some benefit in this quarter on account of the the rupee depreciation. I think it will be also balanced by some of the unusual expenses that typically fall in the first quarter. Like, wage hikes fall in the first quarter for most of us. Increased visa expenses for the year also fall in this quarter. So there will be some expenses on that count. But as I said earlier, I mean, these are the things that you factor into your working of the year anyway.
Will life get a lot tougher if the House were to pass the immigration bill in the version in which the Senate has passed? How would that scenario build for you in particular?
Yeah. So, if you were to look at there are basically two legs of the provision. One is like, what percentage of your total employees are on what kind of visa, that 30-50% and more. That is one leg. The second leg is regarding this outplacement thing. Okay. Obviously, the outplacement thing is far more venomous than the first one. And I believe that, what the Senate has done is not what necessarily the House will do. So hopefully things will change.
Yeah.
But if you were to look at this basic composition of 30-50, etc., in our case, we believe that for a couple of years at least, we should have no impact. Because as in the last 2-3 years, we have also invested in companies in the US which are more front-ended, so who have quite a few employees who are local nationals.
Okay.
So we believe that we will be a little, safeguarded by those measures that we have taken in the past.
You had some pressure on your free cash flows because of your acquisition. We understand that you have to pay out another 25 million this year as well for your past acquisition. So are you cash flow positive now, or will the pressure continue this year and ease next year?
So you see, one needs to look at the cash flows from the perspective of what is the operating cash flow and what is really the investment. So as from an operating cash flow perspective, we have always been very positive. We are a profitable company, and despite our high growth, which actually consumes higher working capital, even if you have to have the same daily, DSO or same level of outstandings, because your sales grow so rapidly, obviously your, total amount goes up and it consumes some cash. But despite that, operational cash flow wise, we have been quite sound. Now, when you go out and buy a company, obviously you are buying a long-term asset. It's like, investing in a building. So obviously it consumes cash. But our normal working has been that, in all the acquisitions that we have done over the years, our normal working has been that whatever investment that we make, in 2.5-3 years, we get the payback in cash.
What will be the quantum?
We should be fine.
What will be the quantum of Forex losses? Because we understand you've taken a hedge at 52.
Forex losses, see.
Hedge losses.
No, you see, the issue is this. What do you call as a loss? And, and what is basically your Forex policy? Our policy is to look at a certainty of income rather than the high income or the low income that can come up because of rupee depreciation or rupee appreciation. So the way we look at Forex is that we would hedge at a certain rate and look at it from the perspective of saying that can we manage our cost below the hedge rate to give us the profit. So, if one were to look at, say you look at, supposing, it was 60 rupees on 30th of June, then you would have suddenly incomes of this year, and next quarter if it goes down, then you will have losses on that account. So these ups and downs, in our opinion, are not relevant to look at. What is really relevant is what is your hedge and what is your cost structure. That's what we focus on.
Thanks, Mr. Pandit, for joining us. That's the word on KPIT Cummins to maintain their FY14 revenue guidance of 14 to 16%. Slip into